So, Justin, did you know that 64% of Americans are more afraid of running out of money than of dying?
I'm probably one of those people.
A lot of us are, because we don't have something set in place that's going to give us that good night's sleep, knowing that we have a plan in place for later. And so that's what we specialize in, is giving that good night's sleep to people, allowing them to feel like, hey, I'm not going to die, and I'm not going to run out of money, and I have a plan in place.
Because everyone's like working their entire life, and then they get to the point of retirement, and they don't know if their government's going to give them enough money.
Yeah, we need to have a backup plan, and we need to have a good one.
So you can't really live off of Social Security.
And what if Social Security isn't even around in
That's what they
20
keep
years
saying.
when you go to retire?
Do you think that's going to happen? Or is it the same thing as like global warming where we're going to die in 10 years?
Well, I think there'll
40
definitely
years
be
ago.
reduction. It just isn't sustainable. But also one of the other problems is people are told they need millions of dollars to be able to retire. And so all they do is put money aside for retirement, and they never know if that'll be enough.
So tell me about Sapphire Financial Freedom. Like, what is it
What do you
that you
guys
do?
do?
What do you do there?
Well, we sometimes say we work for Financial Disneyland. We help people get a fast pass to retirement. And why should only the ultra wealthy get free food and a jump in line? We want to be able to bring those strategies to everyone.
How do you do that? How do you bring what strategies?
We'll get to that. That might be a little bit later down the road. But I do want to say something that's amazing to know is Walt Disney actually started Disneyland by loaning against his permanent life insurance policy. He had gone bankrupt 3 times. The only thing he had was that permanent life insurance policy. That was his only option, and he was able to start Disneyland. So what we do is we take people's good building blocks. Maybe they have a 401k, a savings plan, things kind of laid out, and we're just going to enhance those. They're strategies that have been around a long time, the wealthy have used for a long time, and we're just trying to bring them to people to help them to be able to live the life they always wanted.
We really want to be able to identify the gaps in people's plans. A lot of people think, oh, I'll just stick millions of dollars in a 401k and I'll be set. But that doesn't always turn out the way they want to at the end, and maybe they have to wait longer. We want to be able to identify strategies that can help them to retire earlier with more money and do things they only dreamed of.
And you've been doing this for a long time?
This particular part of our business we've been doing for 5 years. We've been doing other financial things before, but this branding of the business, yeah.
How'd you get started?
For me personally, how I got started, I've been doing the back office and things for my husband for about 20 years. And then one day he was playing basketball and he dropped dead, it seemed like. But he was still breathing, luckily. And we were able to get him out of there. We later learned that he had several health conditions that precluded him from being able to walk and sometimes talk. He'd go in and out of a wheelchair, a walker, things like that, and sometimes he'd walk. But I knew I had to provide for my family and our 4 children. And at the time, I was a biochemist, and I needed to be home, not in a lab, to be able to take care of him. And so I decided to take over his practice. And when I looked at our life and saw how much it would have helped us to have things in place that would have been able to be there for us during those times of when we didn't have income, I really wanted to share that with other people. So that's what got me excited about being in the business.
Can we talk about that in more depth?
Which part?
The whole, your husband falling and...
Yeah.
So, like, what did you feel at that moment? Because I'm sure that kind of plays into being prepared for...
Have you ever been in a
financial
moment
freedom.
that's so all-consuming with fear you didn't know where to start?
For a brief moment.
That's what it felt like.
Yeah.
As I was holding my newborn daughter, my husband, I had to go check and make sure he was breathing every couple minutes. I just carried him up 2 flights of stairs and laid him on the living floor because I didn't have energy to put him on the bed. And we lost everything at that moment. Houses, cars, a real estate empire. We lost everything, his job. And at that moment, I could only pack 2 suitcases, and that's all I could take from the life that we had created. But luckily, I still had my husband. Luckily, he was still breathing and he was still alive. And I still had my newborn daughter. And her name is Faith, because that's all we had to give her. We couldn't name her, Portia or anything like that. We didn't have anything to give her but faith at that moment. And that was a really low part in my life. And I had a lot of fears circling my head. You weren't good enough for this. You can't reach, your goals anymore. You failed the first time. You shouldn't try again. And from there, I learned to blot out those fears and really turn to Christ and figure out that I was worth it and I could do this. And he put this in my path so that I could overcome it and become better on the other side.
And did you have, like, the financial structure set up?
No, we didn't. We had all our buckets in one thing. We had it all in real estate. We lost all of that. It happened to be 2008. Not a good time to own real estate when this happened. And so we didn't have that in place. We didn't have living benefits for my husband that would have provided for his medical care. He needed extensive non-typical medical care, naturopathic medicines, things like that to get over that. And we just had to pay out of pocket. That's why we lost everything.
And so you're like a walking testimonial of the situation of what you're trying to help other people do.
Yeah, I want people not to have that time when which they're so worried about their finances that they make even more stupid decisions. And I want them to be prepared for, whether it's a health crisis or loss of income, or maybe it's a divorce or things like that. We want them to be prepared for that and be ready. Maybe it's a child they find out has special needs. That's part of the reason why Kirsten got into this.
So then I guess, yeah, how did you get into it?
So I have been teaching singing voice lessons for my whole life, and I love that. And there's I am able to make an impact, which I really enjoyed that. But my husband and I always worried about, would we have enough money? And so kind of living in that fear, especially with my husband, made it difficult for us to enjoy life. And Alicia and I have been friends a really long time. So she tried to tell me about what she was doing for a while, and I was like, we're friends, I don't know. But when I finally realized that what part of the power of the strategy is that you can grow money in two places at once. And I've been told my whole life the most important thing is to make your money work for you. So I decided to take a look, and my husband and I actually jumped in and we did some of the strategies, and it really helped to alleviate some of that fear and bring peace of mind to us. Then I got to know the people in the company, and they are just great. They have so much integrity. They put the client first. I could see that in working with them. But I'd never been in finances. Like, could I really do that? To make that leap?
It's just adding and subtracting, isn't it?
No, we do a lot of multiplication and compounding.
I thought maybe it'd be easier than it was, but who's going to hire me without a background? Most of the people have been in the industry a long time. But Alicia gave me the path. And I think more important than that, she poured belief into me. There were times I was like, there is no way I can do this. There's too much to learn. I'm way behind. And she's like, nope, you've got this. And so that is something that we're passionate about, also bringing people into our company that we can do the same for. Give them kind of that belief in them that they can do hard things and learn this industry and then go and help more people.
So what are you doing within the industry?
Actually, we both do the same thing. We're both wealth consultants, so we take kind of people's plan and we enhance it. We just add things to it that make it more powerful.
It's kind of like their plan that they have with their traditional financial advisor is going to be like a great foundation. You have your 401ks, you have your savings, your Roth, and those are great foundation. Those are great. But what we do is we look at where we can add in strategies, fill in some gaps, maybe put a little mortar in the house where there might be a little bit of holes there. And we have strategies that we have proprietary use of, which means no one else can use them. And we basically invented them, our sister company. And so we're able to help people and no one else can. Be able to help them to retire better, basically insulate and protect that house more efficiently, look forward to retirement. For example, we helped one client. He was going to retire in 15 years. And he's like, I have 7 kids. I really want to retire earlier. Can you guys help us? And he just had the traditional 401k. He had, some life insurance. He had some health insurance, things like that. And we were able to rework his strategy. Now he'll be able to retire 5 years earlier with $40,000 extra dollars a year in tax-free money. He is so looking forward to spending time with his grandkids and extra time with his wife while he's still healthy.
And how much did he start with?
He started with $400,000 in his 401k.
Okay. And then life insurance.
Yeah, he had a little bit of it. It was all term, though, so it wasn't going to produce an income for him.
And then what was the other one he had?
He had a Roth.
A Roth. And how much would that produce for him?
That one, all of those together were only going to give him about $40,000 in 15 years, but now he'll have over $80,000. And it's now in a tax-free bucket, so he'll be able to take that money home tax-free.
And then, how much does that mean he gets a month?
So every year he's going to get $90,000.
$90,000, so divided by 12 is, that's a pretty good chunk of change.
Yeah.
But what a lot of
Every
people
month.
like about what we do is they can turn it on and turn it off. They can take more money some years and less money other years. And so there's a lot of flexibility, especially that it doesn't add to your tax, the bottom line of your taxes. It gives you more ability to take more money and not jump up in your tax rate.
I really want to know how to do that.
A lot of people do. That's why I need this. Because right now the government has a lot of say in your 401k, when you're taking it, who you're leaving it behind to, how much taxes you're paying on it. I mean, when you put your money in a 401k, you're saying, I want a Congress that has not been elected tell me how much in retirement I get. Because you don't know what the tax bill is going to be. I find a lot of people say, oh, great, my tax bill is going to lower because now but they have to take the RMDs and they raise their tax bill so high in their tax bracket that it's actually higher than what they put the money in. And it didn't save them anything in the long run.
And that's why a lot of people are doing Roth conversions with their 401ks.
Yeah.
To give a lot more flexibility. I think one of the craziest statistics I heard is that 40 to 50% of all the people who save for retirement go to taxes.
What was that
And
again?
40 to 50% of the money people save
Oh.
go to pay taxes when they go to retire. And so because of that, we want to structure it so that they have different tax buckets. So it's not going to be that huge erosion of wealth.
Annuities. I just kind of like to tease people with that word.
Annuities are great if they're structured correctly and not structured for a commission. We do work with them when there is a need for them. Again, we pull in the financial professionals that you need so that you have people that are on every side looking at that. Do you need a estate planner? Do you need a trust? Do you need a will? Do you have a living power of attorney in place? Things like that people don't think about until it's too late and they're not able to talk or not able to do things. I've been there. It's not fun to have the nurse say, well, do you have a power of attorney? No. Well, he can't talk for himself, so we're going to have to work on that before we can even decide on his medical care. And you're like, you can't just help him right now? Nope, we can't make any decisions. And realizing that your husband is getting medical care later because you hadn't done that document ahead of time, that's when you're like, I'm taking care of that as soon as this is done.
So how soon should somebody be planning this retirement? And
Today, my husband was 28 years old when this happened. And we didn't think it was going to happen. We didn't know that it was going to happen. And people say, I'm going to plan for retirement, and retirement's tomorrow, or retirement's in the future. But when you don't have those things in place right now, he was our sole income earner. If you don't have those things in place right now, you're just waiting for something to happen to you. And it does happen to many, many people. Health bills are the number one reason why people go bankrupt. And if you don't have something in place to help you with the income, even if your health insurance is covering the bills, the income lost. I mean, that's why we lost everything. We didn't have anything there. So start planning now so that you can have that. Even just a little bit. Okay, this is my plan. And I can only put a little bit a month now, but next year I can put a little more. And as you grow in your income, you can grow in your savings. You can grow in your retirement plan. You can grow in the number of strategies that are available to you. When you start now, that provides flexibility for later.
do you go with what's like 10% of you take 30% of your income, 10% of it goes to giving, like charity, 10% goes to savings, I think it is, and then 10% goes to investments. Or paying off debt and then investments.
And it depends. Every situation is different where people are in life and stuff. So we don't really use those percentages as much as we look at what they're doing and then what they could do better. And maybe it's just a couple tweaks. But I think what she was talking about, we have a 20-year-old that got started with us because right now he is not married and he has extra money. And so his plan is smaller, but what it will do for him in the future, it'll be a place where he can borrow from to put a down payment on a home, and a place where he can start taking income as early as 45 if he wanted to. If he waits till 55, he's going to have hundreds of thousands of tax-free dollars that he has access to. What I like is that all of the strategies we use are very tailored to the people. Like the other day, should I share one more story? Is that me?
Yeah, tell the story.
I met with someone who's in their 30s, and they don't have a lot to put towards anything right now. But what we can do is set up something that they just put about $400 to for the next 3 or 4 years. And as they gain money in their business, they'll be able to put more in. What is really cool is I was able to show him if he stays on this path, he'll have about $79,000 of tax-free income when he's 60 years old. And what he said was, he called me back and he goes, my wife thinks I'm crazy. I called her and I was super excited. He goes, I told her we've never even thought about retirement, like that it would even be possible. And it's nothing that we could think about yet. and that you showed me that there's something I could do now to set us up for that. Plus, she'll get a death benefit if I were to die. He's like, I'm so excited. My parents don't have a retirement. Like, everything is hard for them, and just to think that I could start that now. So I think at first it's something that's overwhelming for people, but that's what we want to help them with. Is like, it doesn't have to be overwhelming. We can take it one step at a time and do whatever we can with what you have now, and give you kind of a vision of how it could be.
We really specialize in asking the questions that other people aren't asking. A lot of people say, oh, I have this much in my 401k, or I have this and that's great, and I have those things too. And I'm like, so how much income did that give you? So what year are you retiring based on that? They don't know. They just know the number inside the 401k, and really charting that plan out for them so they can have this goal. Hey, we're retiring in 10 years, retiring in 7 years. This is what it looks like, having that there. Because money itself isn't really the goal. It's the freedom that is offered people. Time to spend with grandchildren, time to volunteer, time to travel, time to start a business. That's really what we want to give people, not just the money, but the ability to be able to enjoy the life that they really want and the one that they want to create without worrying about money. And give them greater ability to be able to impact the people around them. That's kind of what drives us, is our why. Being able to give people that ability to retire earlier and be able to help people in their community, or maybe it's their grandchildren or a special needs child that they need to help. We want to be able to give that to them so they're not sitting there worrying about what's happening next.
So when someone comes in to see you, like, what's the first step that you kind of give them to go on?
We ask a ton of questions, don't we?
Yeah. We tell them. First, it's going to be a lot of questions, because if we don't understand where you are, but also more importantly where you want to be, then we can't give you a good plan. And so we ask a lot of questions. That's the first thing. We figure out what you're already doing, what you're doing well, what maybe there's some gaps, and then we will go from there and put together a plan that's tailored for you and your family, your needs, and then we show you. And once we show you, then you get to decide if that's something that fits.
I think that what brings in kind of the woman perspective is we ask about their feelings. Because some people will have like $5 million inside their 401k, and you're thinking, oh, they're set. That looks really good, you know? But instead you have to ask them, how do you feel about that money? Do you feel that's going to provide for you? No, I really feel like taxes. I'm really worried about this. And, you know, people don't ask those questions. They just ask the numbers on the paper.
I've got 10 homes I still have to pay for.
Yeah, exactly. Exactly. And then they're like, oh, I actually have this huge debt that I need to pay for, and blah, and all these things. And you're like, oh, okay, wait, hang on, let's address the debt and, you know, be able to use those. We have debt resources for people. So no matter where they're at, we can help them. You know, it's not always putting in money. Maybe it's helping them with a new scenario on how to take care of their debt and things like that. We really want to ask those questions about how do they feel about their money and how do they feel about their plan for retirement. Just because it looks like it's good on paper doesn't mean they're actually ready.
Well, going back to that 64% of people are more afraid of running out of money. That same person could have $5 million in their account and they think they can't retire. What we want to do is be able to show them, you can retire. Let's put it in place where, how much do you need a year? Let's figure it out. And then they walk away going, oh, this is possible. It is crazy that people could have so much money and feel like they will never be able to retire, because no one's showed them like how it's going to work.
Oftentimes people don't bring in professionals soon enough. Like, to meet with us, it's free. We get paid on the strategies that we use. So you can meet with us 7 times, and it's a free appointment for them. People are so afraid, and they hear these horror stories like, oh, I met this financial professional, or I met with this person, and it ended up costing, you know, $1,000 appointment. We don't want it to be like that. We don't want it to be a barrier. We want to be able to help people. Hey, come meet with us. Let's figure something out. If we can't figure something out for you, we have resources that can help you with that. And people don't bring in those financial professionals early enough. Like she was talking about the 20-year-old. That's a smart time to bring in financial professionals. You need a lot of people surrounding you from the beginning, so you have a solid team that's there coordinating together your growth and how that's going to happen, coordinating that picture for people and making sure they're in the correct tax brackets is another thing. What do you think, Kirsten?
Yeah, taxes is a big thing.
As I say, do you get, well, who's on your team? Like, what kind of professionals, I guess we can say?
Yeah, so we have access to wealth managers, and we have strategies on that side that help people. We have access to tax mitigation. So most people have a CPA, and honestly, we don't try to replace anyone. If you have people you trust, a CPA, a good financial advisor, we just partner. We partner with people all the time.
So you have your tax guy would be with my tax guy, and then they would talk tax guy stuff.
Yeah, that's a good way to put it. But let's say your CPA is more about history. They file those returns for you. But maybe they're not doing a lot of the tax mitigation strategies that are available. Our tax mitigation specialists, that's all they do. They take maybe capital gains or a sale of a property or things like that, and they help to mitigate those taxes. One of the other ways that they help a lot are with Roth conversions. When you move money from something that is tax deferred, that when you take it out, you're going to have to pay taxes, they can help to lower those taxes so that you can get the money out of tax jail, right? So we have those, and then we have a finance department that helps with loans. We have people for debt. We have people for exit plans for businesses. We have estate planners. What else?
We have a whole department of strategists so that they can look at your personal plan. We really want to be like a white glove boutique service. We don't want to be like, well, everyone's doing this, so are you. We always, if there's a big sign in our office that says it depends, because it depends on the client, their goals, what they want, things like that. Some people are happy, they want to work the next 20 years, and some people are like, if I have to work another day. I just had a client the other day, he's a welder, and he's like, I really need to be done in 5 years. Other people aren't getting this. My last financial advisor took 6 months to even invest my funds after I gave them to him. I really need someone who's ready to go. And I'm like, okay, appointment will be sent tomorrow. You fill that out. We'll turn it in. Let's go ahead and get this done. He really felt the need to be able to retire because he knew his body couldn't take it. And he's super excited. We're going to get him retired in those 5 years. And I think he even has a countdown clock somewhere in his house.
Is he going to retire and then get another job on the side?
No.
Are you able to do that, or he'll just completely retire?
Just completely retire, yeah.
Not even welcome people at Walmart.
Yep. We don't want
He could
people...
if he wanted to, right? Like if he got bored, he can go do something.
That's why it's not about the money, it's about the freedom. So if he wanted to go, start a mahjong club, or he wants to go work at Walmart, that's fine. We want to be able to do that. Go start a book club or whatever. Have the freedom to be able to do that with your money, not have the government say how and when to use your money and how much. We really want to make our plans flexible for people. In case disaster hits, it's flexible. Okay, you can't put anything else in for the rest of the time you have it. That's fine. We have that backup plan in place with those plans, so they're not worrying about a disaster hitting and it crushing everything. And then we have the people who are like, I really don't need the money for the next 5 years. Great, we'll just let it grow. No one's saying you have to take it out, and the government can't tell you to.
Well, and I think, like Justin, you probably love what you're doing, and if you're physically capable, you'll probably want to do it for your whole life.
I will probably do this for till I die, which
Yeah, which we have a lot of people, like therapists, we have a lot of people who really love the job they're in. But it would be nice when you're 60 to have the flexibility to take those vacations, do a little less work, maybe only take the clients you're really excited about, like Alicia and I,
Right.
Oftentimes the wife wants to know if my husband dies, or vice versa. I mean, I'm the breadwinner in my home. What income do I have? And so we set that up. If one of them dies, there's still income for the other one, and vice versa, making sure that plan is in place. Because yes, you do have dreams, and people are like, oh, I'm young. It's going to be fine. It's going to be great. I'm going to go on. My uncle just died, and my mother-in-law died. She was 50. It was sad. She wasn't the breadwinner, but she did do a lot of things in the household that my father-in-law needed to plan for and be able to raise the 5 kids and things like that. And so people need to have those plans in place so it's there, so he could hire a nanny, things like that. A lot of people don't think about, oh, should I get insurance on my wife, or should I get a backup plan for my wife? You're going to need someone. You can't cook, clean, and do all those things. And we talk to people about those situations. What are you going to do? Who's going to take care of the kids? That type of thing.
And then as people get old too, kind of the topic of doing things, as you get older, there's like another tax that a lot of people don't talk about, and that's the tax of getting things done, right? So my dad's kind of getting to the age where like he may not be able to mow the grass anymore, and now you got to pay someone to mow your grass. You got to pay for people to do stuff for you. Is that like planned into the?
Yeah, we always try to make sure that we match the current income they have or make it higher. Because the inflation is going to go up anyways, things like that. So they're more comfortable in retirement. We would say, okay, what is the base amount you need? Okay, now we're going to add in the travel budget, as we kind of joke about that. Like, how many times a year are we traveling? And they're sitting there looking at us like, we get to retire, we get to travel when we're retired, like super excited, right? And so I always tell them like, okay, so when are we doing the Disneyland cruise with all the grandkids and everything? What year are we planning that in? They look at us like, this is awesome. They're super excited because most financial people are just like, okay, what is the base that you need? Like we're talking about rice and beans. What does that look like for you guys? I mean, start there, but we make sure that the plan can cover that, and then anything extra that we make is going to be that fun money for them, because we don't want people eating rice and beans the rest of their life. I mean,
yeah, you want to be able to like afford time and
I did that while I was in
Cumin
Mexico. It
and
was a great time, but not the rest of my life.
No, season the rice and beans.
Yeah, exactly.
Yeah.
Add a little broccoli in there. So we want to make sure that we have diversification within what they're planning. So we often look at the different tax brackets and things like that. Do you want to talk about that, Kristen? Different tax buckets?
I know most people are just upset about taxes. They don't realize that there's more they can do. There are really three kinds of tax buckets. One is taxable. So that would be income that you're receiving, right, is taxable. Then there's tax deferred. That's like a 401k. You put the money in now, you're not taxed, but when you take it out, you're taxed. And then there is a bucket of tax-free. And we try to make sure that every client has that bucket of tax-free, because that's really where you get the flexibility.
What is this bucket? And why don't we just put everything into the tax-free bucket?
Good question.
We don't want to put everything in the tax bucket because you want to make sure
The tax-free bucket. Right?
Tax-free bucket, yeah. Because you want to make sure you're diversified across all three. That way you have some money that is going to be taxable, some that's tax deferred and tax free. If you put all your money in the tax free, then you would have had to pay taxes on it already, and that would really spike your current tax bucket. So we want to make sure that we're within the tax bucket that or tax bracket that you're in when we try to use these strategies, because we're dumping you to the next one and you have a bunch of extra taxes now. They may not mathematically make sense later.
So is that like a Roth bucket then?
Yeah. So Roth would be one of those things. Also, we have strategies with life insurance and different ways that we grow life insurance. That's very different than how other people use life insurance, and allows people to have that tax-free bucket whenever they need it.
I mean, that's such a great topic. What do you think about life insurance? Have you heard things?
I have life insurance.
Great. What
Yeah.
kind do you have?
No idea.
That's what most people say. They say, I have no idea. I have something, not sure what
I forget what it was. Yeah, it's something.
Usually when I ask someone, they're like, oh, I've heard all these horrible things about index universal life or different kinds of life insurance. You haven't heard like the bad rap?
No, I don't really investigate too much. Our financial advisor, actually it's my wife's financial advisor. I have another one from the family side of things. We just kind of had it, and then so with hers, he got us set up on some life insurance, and then it was like, hey, here's a bunch of options of who they can go through, and then you pick like how much you want to pay, essentially based on that, and then that's it. So
We find a lot of people when we ask them what type of life insurance you have, they're like, I don't know. And that's because no one's meeting with them annually. So that's one thing we really pride ourselves on. And we have a whole department at our company that one job is to make sure we have an annual review with that person and everything's flowing inside their plan as it's supposed to. Each year we look at that, put it through 600,000 calculations from the start. And every year we do the same thing, making sure we're on point, making sure that happens. Because a lot of life insurance agents, unfortunately, they do the sale, they got their commission, and they're gone. What we want to do is be part of your family. We want to be invited to your kids' weddings. We want to make sure that we're here, celebrate life with you, and that you have the money to be able to do that. And so the type of life insurance that we use, it's really formatted and designed correctly so that people can use it for income growth. And not for our commission. So we take about a 35% less commission than most life insurance agents, and we put that money inside of the plans to help them grow. So you can buy the same policy from someone else and still make more money just doing it with us. We really believe that, if I was supposed to make this huge commission, let's give half of it to you and put it in there. It's not really the commission, but it's just the way it grows inside. And just the way we structure our life insurance is more fit to what needs do you have. So you may not need the life insurance right now, but you might want the death benefit now so that you can protect your family. But you also, in the long run, don't just want to be renting it like a term insurance policy, and later you've got nothing to show for it except for increase in premiums. But instead, we grow it so that later on you now have not only the death benefit protection, but you now have an income you can draw from.
how's it? So like as you pay into it, then you can pull it out, right? It's something like that.
Yeah, so a lot of people know about permanent policies. They're called term policies. And in that, it's like renting. You pay a certain amount every year. It's usually really low, and you'll get a death benefit. But it's term, meaning maybe in 10 years it expires, or in 20 years it expires, right? With ours, we stress permanent life insurance policies because in a permanent policy, you can grow cash value. So that money inside that policy becomes like buying a house, equity that you can use, you can loan against. What's really nice is the money inside of the policy is growing tax deferred. So now we get that bucket, right? Tax deferred. Then when you loan against that policy to take income, it's not taxable.
Because it's a loan.
Mm-hmm. Yeah, so those are some of our secrets, but there's a lot of people out there doing similar things, but it's not the same because we have dialed in so well. We just have really good strategists that are able to pick the carrier, pick the product, and pick how we structure it so that the cash value is very maximized, that every year you're growing. And yeah.
A lot of people go with the whole buy term and invest the rest. We say, why don't you buy a policy and invest in it? And people don't understand that because our strategy, it allows people to be able to not only have life insurance, but also have an investment with the same dollar. And this way that we work that strategy, we don't put a lot on the web about how it works and things like that because people try to copy it and they hurt people. And it's been sad to watch people not wanting to share their commissions with us just to get an extra buck and then hurt their client in the long run. So we don't go into too depth about how our strategies work because of that. We want to be able to meet with the client and curtail exactly to how they need it. So we're really big in being able to have the policy and be able to invest at the same time, which is something that's a little bit different. Usually you're fighting with your life insurance agent and your advisor over who gets the money. We're saying, why don't they both have the money? And we developed a strategy that allows both of them to build in the same sandcastle and builds you a nice sandcastle inside that sandbox.
So you're talking about if someone already has a plan.
Yeah, or if they don't, both ways we can have people grow money both places at the same time, same dollar.
One of the really nice benefits of an indexed universal life policy is the zero floor. So that means that basically like if you're rock climbing, you put in an anchor and you don't fall. That anchor keeps you there, right? The next time you start, you're going to start from there. So an indexed universal life policy is kind of like that in that when the market goes down, you're kept where you stayed, where your anchor was. What's great about that is that you don't lose due to market downturn. So it provides a little bit of extra security.
But you can gain as the market goes up, maybe not completely, 20%, but I mean, last year my policies did 10% and 13%, and I had a zero floor. So it can do really well for you. And we just make sure that our numbers are always lowballed in all of our examples so that we make sure we're always under-promising and over-delivering for our client. We really pride ourselves on that. We have thousands of clients, hundreds of millions of dollars that have been put into our strategies, and we have over a 95% retention rate. So that's a percentage of clients that have gotten our strategies that have stayed with us.
That's
over 12
good.
years.
That's good. So everyone gets all the upside, but no downside.
Yep.
That's possible?
Yeah.
So not all the upside.
Most of the upside.
Yeah.
Because there is a cap.
Okay.
And that's kind of how the life insurance company is able to still make money. But we don't put everything into life insurance. That would never be advisable. So in someone's strategy, they're going to have multiple buckets, and some of the other buckets will be able to capture all of the upside of the market.
Okay, so if I already have a financial advisor, how do you play into that?
That's a great question. Actually, we
Fire
love
them right away. Just
fire them?
completely
Should I
get rid of them.
my guy?
No, we don't want to do that at all.
Yeah, no. I guess if they're not very good, then we would have you fire them. But
How would you guys analyze what he's doing too and all that and be like, hey, he's kind of you're losing
so
money
we
here.
say that, let's say we had a conversation and we showed you some things that might be possible, and you took that to your financial advisor, and they were like, no, life insurance is horrible. I won't even talk about it. That's a really bad plan. And they're not willing to come and meet with us and hear about it. That's usually an indication that maybe they're stuck in a box that isn't going to be as beneficial for you. But we find most people that like their financial advisor or their CPA, they're willing to work with us because we don't take money. We don't take money from them. We just enhance what they're already doing and enhance the client's overall picture. And so we partner with people. Mostly that's what we do. We partner with other people that are doing really well and that clients already trust.
Even if they claim that they're like a fiduciary.
Actually, we want fiduciaries on your side. It's very good to have a fiduciary.
Right. But like if their financial advisor isn't, like how does that all work? Right. If you find out that they're not really working for you.
I'll give you an example. I had a financial advisor came in to a meeting with me, and he was asking me questions and things like that about the strategies we're using and everything. And then he told the client, I'm going to meet with Alicia separately, and I'll get back to you. He asked me one question in the next meeting. It wasn't about my strategy. It wasn't about this. He said, how do I get paid? That was it. That was just one question. I was like, so you're okay with your client using these strategies? Well, I'm not going to tell it to the client unless I get paid for this. And that's what I told the client. I was like, I just want to be honest with you. I'm recording the video. You can look at that. Those aren't the financial advisors we want to use. We want to use the ones that are like, hey, we don't look at this strategy. I haven't heard of this strategy before because it's proprietary. We have it. But let me go ahead and look at it and see what would fit into your portfolio. Yeah, your bond portfolio over here, you can instead take that and use it over here in this strategy. What we do is actually create like a AUM machine. So we're just going to be giving money back and back to the advisor anyways. And if he can see that and is open to new types of strategies, they've been around for a while but not available to everyone, then that's great, and that's a great fit. Often what ends up happening is that financial advisor starts bringing us other clients of his or hers, and we start working with them also, as long as they're open to new ideas.
So all the people you guys work with are fiduciaries, I take it then.
Not all of them. Some of them are life insurance agents. Some of them are enrolled agents with like tax planning, CPAs. We work with them, and some of them are, series licensed and fiduciaries.
So a wealth manager or a wealth advisor, they're a fiduciary because that is something that they have committed to be, right? And that's why we like to partner with wealth managers, because as a life insurance agent, we can't be a fiduciary. But for us, it doesn't matter. We're going to represent the client and do what's best for the client no matter what. And that's why I like our company. But to have a true fiduciary, they have to be like a wealth manager, a wealth advisor. A CPA is supposed to also be a fiduciary. But we do take those seriously. We'll tell a client if we feel like maybe they're being steered in the wrong direction and let them decide.
Do you know what it takes to be a fiduciary?
You have to have certain licenses and sign up for certain programs, things like that in order to do that. We have fiduciaries on our team that work with us, wealth managers and things. For Chris and I, we got to be able to sleep at night. I don't care what my license is or what my fiduciary, anything like that. I got to be able to go to sleep at night knowing I did the best for my clients that day, and the ones that are, repeat clients, that I did the best I could for them. I don't want them waking up the way I did one day and being like, hey, my world just crashed and I have no one to turn to. I want them to know that they're here for them, no matter what the crash is about. Or maybe I can't help them with that, but I can be like, hey, here's a local food bank, here's these things, and be able to help them through that scenario. And so we go to bed at night knowing that we've done the best we can, so they're never in the situation I was in.
You're both married. I'm married, and you have children, and then, like, with life insurance, it takes care of the children too, or is it just takes care of the spouse, or like, what if like people have different family dynamics and?
Yeah, we can definitely look at that and structure it differently. We have some spouses that don't want to leave the benefit to their spouse. They want to leave it to their children. We have some people that don't want to leave it to their children. They want to leave it to their grandchildren. And luckily they can structure it that way. I think something that, we both have 4 children and we both have children with special needs. I didn't get into this until, a couple years ago. And by the time I did, we have policies on each of our kids, but I have a child that has a lot of special needs and he has a lot of health issues. And he wasn't able to get life insurance, which is really sad to me. People ask, is it too early to start? I'm like, no, you should get life insurance on your newborn. Because if you do that, no matter what happens, what kind of maybe diseases they have in the future, you have access to something that can help them. You can borrow from it to help, provide for their needs. And actually, that's one of the reasons I got into this business, because Alicia said, hopefully if you do this, you'll be able to have access to more care for your son. And I think that's the stress most parents have when they have someone that has high medical bills, is that right now, all of the stuff that we do is traditional. To have access to those other means of treatment, it takes a lot of money. So some of our families we set up early, they have access to that. They can loan against their policies to help their child, but and our children, the policies on them can help us during our retirement, but also will help them when we give it over to them. They can take income from that. I love that she has a plan for her son to be able to be a teacher. Just tell them about that.
Yeah. So, I don't know.
Courage wants to be a teacher. Oh, I don't know if I should have said his name. Anyway.
Oh, you're fine. I actually had a question though, but it's like, so you get a life insurance policy for your children, but like they don't work, right? So they're not like supplying for the family in a sense to like insure that part of it. So
So you really do it for that cash value growth, because when they're little, first it's going to offset if something were to happen to them. It's going to pay, their funeral costs or something like that. But because you started it early, you can put money into it every year. We have people that do that instead of traditional savings for college. They'll do that, and when the child goes to college, they'll take a loan, and then they'll use the policy to pay that loan back. And instead of being zero by the time they're done with college, they're going to have hundreds of thousands of dollars that have been accumulated over time. So those are all more complicated kind of ways that we use them, but we use them on kids all the time. When parents want to help set their kids up for something, not just give them big, piles of money.
Because you can't take a loan on like a 401k or an IRA. Like
You
you
can.
just withdraw it, or
You can take loans on them, but they're very strict on why and how you can. And they don't have as good of growth or liquidity.
so why wouldn't someone just always just do a life insurance policy as their growth? Is it not like connected to the market, or?
Well, sometimes people aren't able to. So I have a client who's not married, has no children, and they're not healthy enough to get a policy. So that's when we talk about our alternative strategies over at our wealth management, so they can take advantage of that. Sometimes a policy doesn't work for them in that way. Or maybe they don't have the income for the size policy they need, so they can only get part of it in the policy and part of it somewhere else. And so we need to tie that in. That's where it depends comes in a lot, is making sure and seeing where the client is at and meeting them there.
And I think we talk about this a lot, like life insurance should be the conservative part of your portfolio, right? If you're younger, especially, and you start a policy, that's a great place to start. But you should have money in the market. You should have money where it can get more upside, but not all your money. So that's why we don't put all our money in life insurance, and we don't put all our money in investments either.
So it's like if you just had a financial advisor, like you'd be missing out on a lot of different opportunities to grow money.
Yeah. For example, we have people who are real estate investors, and they're like, oh, we don't do life insurance, we do real estate. I'm like, that's great. Let me show you how you can make money inside your life insurance and your real estate at the same time. Oh, and by the way, you can flip money in and out of this whenever you need to flip a house. And they're like, oh my goodness. We have ways of them being able to loan against their rental properties and putting it into a policy, pay the policy. The policy pays the mortgage bill for them, so their net cost is zero, and they end up 20 years later with hundreds of thousands of dollars of retirement, and the net cost is zero to them. And so we have strategies that basically allow people to do what they want. If they want to do real estate investment, great. Let's just make sure we have a backbone behind that real estate investment in case it flops. Money growing somewhere safely with that floor.
That's pretty neat. Yeah.
And that's a whole nother.
Whole other ballgame.
Yeah.
But yeah, that's just a little insight into the type of strategies we're talking about. Being able to move your money from qualified fund into a policy or into a Roth is going to create a big tax burden. Well, what if we could cover that tax burden with the policy and offer tax strategies to lower that, so that you get all that money into your policy or into whatever you want it into, and not sit there with a huge tax bill first and then take what's left over.
Yeah, you know what's crazy?
There's a lot of terms in there that.
I know that we got to simplify it. The simplify is that we take money and make it work harder for you, whether you're in real estate or whether it's in a 401k. But what's really cool is when we have financial advisors that are open to our strategies and they come, they're like, I've been in this business for 30 years. There's nothing you could show me. We show them and they're like, why doesn't everyone do this? Why doesn't everyone know about this? And we're like, well, because we're selective who we work with. We don't want to grow like wildfire because that just opens it up to a lot of people doing it the wrong way, which can really hurt people. So we want to grow it strategically and in a way that's sustainable. So the 20-year-old was like, so when I'm 60, you're going to be dead. I'm like, yeah.
That's okay. My son's taking over for me, so he'll be here.
And we have a whole sister company that has a contingency plan. We're planning on being around forever, meaning that no matter how old you are, you start with us, you're going to have the support and the annual reviews every year to just make sure that you're covered for the rest of your life.
And that goes with pretty much any company that a 20-year-old may go
Yeah.
with, right? It's like everyone's older than you, and even if they weren't, right, there's the risk of just accidents.
That's true, but I
So-
think when they see that maybe our strategies are a little more complex, they worry that who would be able to manage that if you weren't here, right? But we have a plan for that. So
And that's a secret. The secret sauce.
no. Oh yeah, we have
We have
lots of secret
succession
sauce.
plans in place. Several of us work remotely, so we'd have to have like 10 planes hit a building in order for it to fall apart. So we have a lot of different people strategically placed.
But I
So-
think most people don't realize, like, your life insurance, when you come with us, your life insurance, we only put it in A+ rated carriers. And those carriers have been around for hundreds of years. They're going to be around for hundreds of years. So you have that. And then the other thing is when we have money that we're going to use in the investment, we use Charles Schwab, which is a well-known brokerage company. They're going to be around forever. So we're not taking your money and then like secretly doing stuff with it and being like, hey, we're going to give you lots of money back. They're actually in places that are highly regulated, I mean, I can't believe how strict they are on both sides, but that's to the benefit of the client, making sure that they aren't getting scammed, because that happens every day.
Even to our clients, we'll have people say, oh, yeah, I have this person who's going to do investments for me. It's going to be great. And they come back to me a year later and they're like, I'm working right now because I didn't put my money with you and I put it with someone else who I thought I could trust. And that's one reason that really drives Kristen and I, is being that person someone can trust, making sure we've done the research. So I have a master's degree in biotechnology. I don't just say, oh, this looks good, here we go. No, it's really thoroughly researched. Before we even take on a life insurance carrier, we do a month worth of math to make sure that's done. The two things we hear most often from people is, this looks like magic. And I would just say, nope, it's not magic, it's just math. And when you have people as smart as we do that are working on our team and they're coming up with these strategies, we can make math look like magic, but it's not. There's 600,000 calculations that go into these things or more to make sure that they're correct. The second thing we hear every day is, I wish I met you sooner. Why didn't I meet with you sooner? Oh my goodness, I wish I would have met you sooner. Because when you have time on your side, the compounding is just, off the charts. It's much better for people.